Hola guys, ¿qué pasó? How's everyone doing? This is Hala Pablo, and welcome to another Bitcoin update. I figured we could also do Ethereum while we're at it. We'll do a real brief video here, just a continuation. Nothing much has been happening over the Christmas break so far. We've seen just a lot of consolidation, sideways impasse, bears and bulls standing off, seeing who's going to move first. And we've had some ups and some downs, but we've maintained a pretty flat line price action within a narrow spread. And so I've got this chart right now on, this is Bitcoin USD, Coinbase, on the 10-hour. So we've zoomed out a little bit on the high time frames. So just to show you, and those of you who've been following these videos, you pretty much know the macro pattern of where we are. I hope I've made that abundantly clear. Because once you know the macro, you could rest at night knowing that you're safe for the most part. You have a good handle on where we are, how we got here, and where we're going, quite possibly. So yeah, this is Bitcoin. We're in this macro falling wedge pattern. Falling wedges are reversal patterns, as are all wedges really. Rising wedges are bullish and falling wedges are bearish. And so we're seeing both. See, like right here, we had a rising wedge. What happened? We dumped, right? Because rising wedges are reversal patterns. And then here on the macro, we're in a falling wedge. And this falling wedge on the long term is a reversal, is bullish, but not so fast, because we are in rising wedges. Rising wedges on the micro make up the innards, or the inside of these falling wedges. So eventually we're going to go up, but not until we break the structure of this falling wedge. And right now it looks like we're still under the governorship of this falling wedge. Here we are currently, this area here, where we see we have this lateral spread. We are at the macro trend. This is the macro of the falling wedge. This is the resistance, the macro resistance. And you see we are encountering indeed some resistance. We are still in the vertical bar volume. We have predominance of supply, which isn't shocking, being that the overall bias or sentiment of this wedge has been bearish, and it continues to be bearish. And so from the previous videos, you know that I've drawn out these order blocks here, 1, 2, 3. These are areas that we could potentially rally to before the macro pullback, which is pretty much obligatory being in this falling wedge. So the pattern has been we pump up, up, up in a channel, and we hit the resistance, and then we get kicked back down into the wedge. Usually before we get kicked back down, we experience a semblance of a rally or a pump. And it looks like we're breaking structure. It looks like we're going to bigger and better things, only to encounter a supply block hovering above the macro resistance, where the buy orders come into place. It's like the market makers have their machine gun nest set up, and it's just a battery of shorts, which is why they're supply blocks. And all of the FOMO traders who bought in foolishly at resistance without testing the volume spread will get basically destroyed as the price dumps back into the wedge, and usually back all the way to support. It hits. This is where we see these macro dumps, like this one here, occurring on what day was this? This was November 8th. And then we had another sizable one here. And here. Yeah, these are the macro ones. These are the ones that we feel. These are the ones that make the news, and you see everyone going crazy, making videos about on YouTube. All the influencers and traders and all that are, that's when people start going live and all that. Starting these macro dumps or these markdowns that are intra wedge. So, but the point is that before these pullbacks take place, there's usually a pump, something that pumps hard and fast and high, and it entices people to buy in. So, and it occurs usually around these junctures where these micro supports on these rising structures, these either wedges or parallel channels, ascending channels, come in to contact with the macro resistance on this wedge. It's usually when you see the pumps, and that's to create the illusion that we're breaking structure and to get as many longs in there as possible to where they can fall prey to the shorts that await them in these order blocks. And where we are right now is no different. We are experiencing some sort of a pullback now, but we're still intra range. We haven't broke this lateral trading range. We would have to mitigate this area at 16.2-ish. That's at least where the wick came down on this. Looks like a spring down here, but I think it's more of like a sign of weakness. And so we would have to come all the way down and mitigate this liquidity void down here at 16.2. And if we go further than that, then we can experience the macro pullback or the macro markdown, which would take us theoretically to the 1.272 and then to the 1.618. And that's what we've been seeing over and over again in these structures. Let me kind of get rid of some of this stuff here. Now, when the price action marks back down to the macro trend support, we're usually seeing double bottoms established. And I'll show you these double bottoms. There's one here. See these double bottoms, 1 and 2, where it mitigates, and then we start to see, and then here we had like a bear symmetrical, and then we start to see another attempt made for the macro resistance. But that's after it completes a double bottom. We have another double bottom here and here. These areas, the first time it touches down is the 1.272, and the second time is usually the 1.618, and that's where it hugs support and begins to muster up a new attempt to hit the resistance. We see it here and here. And so if we do the same thing again, the 1.272, the first touchdown should be around 14.6, and then the second touchdown where it would mitigate along the along trend support should be somewhere in the vicinity of 13.6. Before that happens, though, remember, we could always rally. We could have a FOMO pump or a scam pump up to, well, the resistance, the supply order block where we are now is 17,000. If we break through that, we can go to 18,000. And then the ultimate would be the 21,000 order block, which is this one here. If we go up here, instead of coming back down intra wedge, we go up first. We, of course, would mitigate this. And then I would expect some more lateral consolidation, maybe kind of forming what might look like a cup and handle on that, and it was going to continue up to the 21. But if we don't do that and we come back down, then this pump right here would be seen as a last point of supply, LPSY, and then this one here, the subsequent LPSY, and as we mark down whole scale. So these will be last points of supply as we mark down here in this. Now the 13.6, the 14, what is that? The 14.6 to the 13.6, this $1,000 price range in here. This could be a bottom. this could be something of a bottom, or we could just break. If we don't break structure from here, we could go down again, and that would take us down to the $10,000 Bitcoin range, and that would mitigate that macro retracement or the $10,000 line, which was the floor for previous bull cycles and consolidation markup from there. So 10,000 is possible, but for now, the 14.6 to the 13.6 is something that we can realistically anticipate if we fail to break these supply blocks where we are right now at the macro resistance. So that's with Bitcoin. With Ethereum, here's Ethereum. We'll keep it on the 10-hour. Same thing, guys. We're in this macro falling wedge made up of micro rising wedges. There's a rising wedge. You just see the rising wedges here, intra wedge, intrastructurally, which which come up to the macro resistance and fall back down into the wedge where we see a series of double bottoms being formed. I haven't calculated the fibs on this, but I imagine it's about the same. This one's probably like the 1.272 from here, and then this one, this like lower wick that came all the way down is probably like the 1.618, another markup. So we have this double bottom here, and then we come up here, we have a triple top, which is a rising wedge, and that triple top, of course, distributes because rising wedges are what? They are bearish, right? Reversals. So, and then that comes back down, forms another double bottom here, and marks back up, another rising wedge, comes back down, and now we are currently in another rising wedge, and I anticipate this to come somewhere close to the macro resistance and perhaps have a little FOMO pump like it did here and here where you see these tops. Maybe have another one where we can break out around like $1,200, $1,300, and then I imagine we're going back into the structure and back down to now the fibs that I drew on here, the 1.272, where we could see Ethereum hitting is the $1,000 price range, and then the 1.618 could be $900 Ethereum. If Ethereum hits $900, if Ethereum hits $1,000, $900, I would seriously consider dollar cost averaging at that point. I live in the United States, so I can't short crypto legally without a VPN, but I can certainly dollar cost average, and this would be a good buy. This is like good fire sale prices, I think, here. Never go all in when you DCA, by the way. This isn't financial advice. Never go all in, ever. But just take little small bites and then go use the retracements or the extensions if we're going back up to kind of guesstimate where we're going to go. And then once we hit those areas or those fib target levels, you know, throw in a little of what you can budget, what your budget allows. Because let me tell you, these are great prices. And coming all the way down to the $900, this would mitigate on the macro this $900 macro liquidity void. So I think we're going down, and that would form a gigantic double bottom for Ethereum in preparation for the macro reversals whenever that comes. Usually, if you go and you back test these cryptos on the macro, on high time frames like the 10-hour or the daily, you see that you see a series of double bottoms. On the macro, you should be able to see double bottoms. So these single bottoms, you never see something like this, where you see this small bottom here. And you may say, well, this is a triple bottom, right? Because you got this and this and this. No, I don't mean that. This is a triple bottom, obviously, but it comes back up. And what I'm talking about when I mean double bottom, I mean it could be a series of double bottom or a triple bottom, goes back up and then retests and forms another triple bottom or a double bottom, and those two get mitigated. Those two bottoms get mitigated. That's what I mean by double bottoms on the macro. You need to see something like that. Usually you see that more often than not in crypto. Just go back if you don't believe me, and you can see them everywhere. Something like that. So this $900 hasn't been mitigated yet on the macro. So I'm expecting this to come down, maybe mitigate, form form a new double bottom there, and then I'd be like, okay, we can start to anticipate reversals now. And maybe that'll happen in February or March. We're just going to have to keep watching. But all right, guys, this has gone on a little bit too long. And so let me let you go. I got to get back and do what I was doing. I just wanted to just drop this little update. And I hope, you got something out of this. I hope it confirms some of the technical analysis that you've been doing on your own. And if you've gotten anything out of this video, like, subscribe, and you'll be sure to get more. It'll also help traders find these videos to help them with their technical analysis. So there's no shilling. There's no bullshit. This is just solid technical analysis. I've got nothing to sell you, nothing to shill. So, this is the channel for you if you're into just solid technical analysis and learning Wyckoff and volume spread. And I encourage you to check out my charts on TradingView. I'll put the link in the comments. I'll pin it up. And so you can go and look at my win rates on all the charts that I have there. I have about 400 charts. In fact, I just closed out synthetics, which hit the 1.618 retracement. I've got the charts on there. You can play it back. And so anyway, all right, let me let you go. I hope you guys got something out of this. We'll talk to you later. Have a good one. Hope you had a good Christmas, Hanukkah, whatever you are. All right, adios. Bye.